Welcome to this month's Seniors Living Smarter webinar, Learning Your Way Around Texas Property Taxes. Why we have to have a tongue twister, I don't know, but we do. So we're glad to have you with us today. For those of you who have not had the opportunity to meet, I'm Virginia Lazenby. I'm a certified senior downsizing coach and Texas realtor. And I started these webinars, originally seminars, because I see such a need for seniors to have information. So the goal of Seniors Living Smarter seminars, or webinars now, is to educate, equip, and inspire seniors to make informed choices and empowered decisions regarding their lifestyle. So today's topic is a little different than many of our topics that focus more specifically on lifestyle and how do we plan for our next few years or many years, we hope. But today's topic about taxes does impact the quality of life in our community and in our city, in our county. And obviously what we pay in taxes affects our financial planning. So that's what we're going to be discussing today. But before we get going with our specific topic, I want to give a little bit background information. As I said, I'm founder and host of the seminars. And over the years, I've been fortunate to have other senior focused businesses or services related to us to join, or related to serving seniors, to join with us and sponsor these seminars. You've seen the slide rotating about who the sponsors are: Silver Key Benefits, Vera Bank, Visiting Angels, Wesleyan Homes, and my business, Seniors Living Smarter Services. We've usually often had the sponsors to introduce themselves briefly, but we're starting a new segment this month. We're going to do a sponsor spotlight. We have one of our sponsors with us to give a little bit more in depth about their area of work in general, as well as their particular services. So today, our spotlight sponsor is Will Boughton with Vera Bank. So I'm going to have Will to join me up here. Oh, and let me just say ahead of time too, you know the wonders of Zoom. You think you have it all worked out, and sometimes internet connections become unstable, so we do the best we can. But if we should freeze at any time, just stay with us. And anyway, we'll make it through it. So Will, and there you are. How are you?
I
Will,
made it.
you're in. Yay, we're always glad. Okay, that's great. So Will, would you introduce yourself to us, and then also tell us a little bit how you help seniors?
Great. Well, thanks. So yes, Will Boughton, that's my name. I work for Vera Bank. I'm their trust and wealth advisor here for the Central Texas market. And in a nutshell, what I do is I provide financial advisory services to our customers, anywhere from, of course, on the estate planning side, managing family trusts, business owners with business transitions, and all of those crucial decisions they make. And another huge part of what I do is assist our customers with retirement and general financial planning, and really just making those decisions and allocating resources efficiently, so that we can make sure they last the course of our lifetime, and preferably have something to leave to the people and causes that are important to us as well. And my job is really kind of the nuts and bolts of how do we make all of that work, just to be able to enjoy our life the way we want to enjoy it, as well as have confidence that technically, I always think of money as being kind of like air. You don't really think about it until it becomes constricted. And we make sure that we don't have any constrictions, and that's really a key factor in what we do. And I'd say certainly very important for my senior clients who are in that retirement stage, and living off of really the fruit of their labor and their savings over the course of their careers and lives. And the accumulation of all those decisions along the way kind of leads us to that point, and then I kind of help with getting on to that stage where it's like, wow, I don't have to work anymore. So in a nutshell, that's me.
All right, we appreciate that. I think one of the questions we often hear is, oh, I just don't know if I'm going to have enough money to carry me through. I see this a lot when I'm working with seniors downsizing, and they're looking at senior living options, and they look at the price of a community, often independent, and then knowing it may evolve into assisted living, or they may need more intensive care so that they have to pay a higher rate. And it's that whole planning. So as a estate planner and so on, is that something, and I want you obviously to focus on your services, but I want the audience to know too, that Will's representing the industry. We're very committed to our seminars being informational pieces. And then if we can connect and help you, that's great. But back to my question then, is this where financial, especially seeing an estate planner, or what category would we look for if we're trying to figure out if we're going to have enough money to last us?
Right. And, certainly, I would say, for that specific question, that's the financial planning component. And estate planning is, of course, a big piece of that. But the piece we're really considering right now in this particular question is, the nuts and bolts of my life, and specific my time on this earth, and making sure that I have enough in liquid assets that I can access if I need them. What does my insurance picture look like? Do I have, for example, the long care term type of insurance policies in place to help me out if I need them? If I don't, what's plan B? And looking at those kinds of decisions, and that really falls in the core of financial planning in general. And the good news, I think, is from my own group of clients, I'm really blessed so far that the group of clients that I have worked with are folks that they worked hard their whole lives. They've been very diligent, very disciplined and frugal folks, and and we're looking good for everybody as we stand on the ground right now. But there's always those X factors that we need to think about and plan for, and that's the value of having a good qualified financial planner. Can help you kind of even understand what questions we should be asking, by looking at where you're at on the ground today, and what adjustments do we need to make it all work. So
that reminds me, and we discussed this a little bit earlier even this morning, but for some people, we become so concerned or worried about getting everything together and answered before we take a concrete step. I loved your term, analysis paralysis. I'll let you talk a bit more about that. But I know when people say, oh, am I going to have money to do things? But financial planners, especially the senior focus, help people to get some guesstimates about length of time, and you would have some general figures to share.
Right.
Okay. Which is also a nice segue to remind people about next month's webinar that Will and others will be with us, because it will be about understanding the cost of senior living. So as it turns out, this is a good introduction for that. Another question I wanted to ask you, Will, is when we talk about estate planning, some of us think, okay, I go to the legal world, I go to the attorneys to do that. Some of us think, well, I go to the financial person to do that. What's the answer, or how does that work?
Right. Well, and I guess we always say the nuanced answer is it depends, and it's
always
a one-part answer. But myself being a fiduciary, and because I do serve as a trustee for a large number of our clients, I have that background, and people like me who do what I do, we have that background of having lived in the estate planning documents that are created by attorneys. And seeing how they work in real time for the beneficiaries, for the grantors, and who's the person who's living now and living within those documents and those structures. So, someone who sits in my seat, we can kind of say, okay, cool. Well, this is where you're at right now. These are the people and the things that are important to you. This is the set of assets you've got. These might be some strategies that we could pursue for you just based on what you've told me and what you've expressed is important to you. So then that can help with, okay, now we go to an attorney and get documents created. And I kind of look at it as, the attorneys are the guys who create the documents, and then we're the group that executes what those documents say, and we actually live inside of it and make it all work. But I'd say you don't have to have all the answers in your head before you start the process. You know, it's people like me, and in conjunction with working with your attorney, you know, and also, you know, selecting the right attorney to do the job, because, you know, not every attorney is created equal. Just like physicians, you don't go to, you know, a foot doctor for a heart issue. It's the same thing with estate planning attorneys. You want to go to a specialist in that field. But we work together to kind of come up with a plan that, you know, based on the input we get from, you know, our customer, what is going to be the best structure and the best way to do things. So they don't have, and you don't have to have it all figured out in advance. We can kind of take the long walk of getting there with it. So that's what I, you know, we talk about the analysis paralysis. Let's not get bogged down in that, and let's just kind of roll up our sleeves and dig into it, and then we'll get there.
Okay. And there's a feeling sometimes when I hear people, oh, well, estate planning, that's for people who have lots of money. I don't know what the criteria is for lots of money, but for those of us who feel we don't have lots of money, is there still help for us?
Absolutely. Everyone should have at least a will. And here's why.
Thank you. Yeah.
Anyone who has anything should have a and who has anyone who is important to them, you have to have a will. The simple answer is, if you don't have a will, the state decides where your stuff goes and who it goes to, and in what proportions it goes to. And do we really want that? I don't. And you know, I'm at my stage of the game. I'm earning, and you know, I've got 2 little kids, and you know, I haven't necessarily got, you know, the big pile of assets out there yet, but I do have my life insurance for my kids, and I have, you know, if something were to happen to me and my wife, want to make sure that they're taken care of, and it's just a roadmap for how do we make these things happen. And you know, so it's just one of the most important things you can do is have a will, and they're not terribly expensive at all to have made. I mean, and some people can even write them down in their own handwriting on paper if that's what they really have to do. But just to have some kind of a document that's official and valid that says these are my wishes is crucially important.
And I look forward to looking at some more extended discussions at times. We've had attorneys on with us before, and we stress that, and it's really nice when someone outside of the attorney role still emphasizes we need to have that will. One final question, Will, is, you know, you've shared a lot of ideas or information. Now my mind is spinning, as I imagine many people are. Many already have well established with a financial planner. Others have, for a variety of reasons, may need a little bit more information. Okay, I'm going to ask the elephant in the room. Okay, I really want to talk to Will and get some questions.
I'll get back here behind somewhere. Oh, I'm sorry.
Oh yeah, look for yourself. Good. I want to talk to Will, but even if I get past the analysis paralysis, it's like, how much is it going to cost me? And does this commit me to working with him forever and ever? Just put the elephant in the room out there. Do you do consultations to kind of get people started thinking about it?
I am always very happy to have a discussion with anyone about what's going on in their financial life, and you know, see what I can do to help. And that's whether or not they are an ideal, you know, like their situation is an ideal client for me, or if I'm an ideal advisor for them. You know, that really is secondary to, you know, being a resource out there in our community. You know, and if we find we're a match made in heaven, that's wonderful too. But and I would never charge for something like that. It's simply a matter of, hey, let's have a discussion, and you know, if I can't help, I might be able to guide you to resources that can help, and you know, that's gratifying in its own way. You know, and so that's just out there for, you know, as a public resource. That's what I'm there for. You know, and you know, business naturally grows from being that way, I think. So
I appreciate that. And when I mentioned earlier, when I've added sponsors to the seminars, to the Seniors Living Smarter seminar series, the people who are involved with us really value seniors being informed, having information. And I know Vera Bank is relatively new in town, a couple years or so. And from the beginning, you all have had a focus on serving seniors and helping to educate. So those of you who might need some discussion about that, here's a guy for you to turn to. And I want to thank you for being with us for this segment and our first sponsor spotlight. Thanks, Will.
Thank
Okay.
you, Virginia. Appreciate it.
So let's turn to our topic today, learning your way around real estate, around Texas property taxes. Our topic's quite timely, as most of us have just received our appraised values of our homes for 2021. And as you open the envelope, we often hear these, oh my goodness, look. If I'm wanting to sell my home, we're glad to see the appraised value go up. If I'm living there, I want it to go down. But we want to get some information shared today. Some questions that often come up here are, how can the value go up that much? And how much am I really going to have to pay? My taxes are frozen, but what does that really mean? And so these are some general questions. Another one that I like as a realtor is, okay, is this appraised value? Is that what I can sell my home for? We'll talk about that later. But, and then when we are selling our homes, how does that get straightened out? So we have two expert panelists with us today, and I'm hoping their views will come up. Harry Gibbs and Wende Wood will be joining us. And let's see, so are they live yet?
Hey, Virginia.
Yes. Here.
This is Steve Dukovic. I'm probably showing up as Howard Polanski, but just letting you know that I'm here. And I do have a couple comments to make about that property tax code that we've mentioned earlier. So,
okay. Thanks. Okay, so when we get a little bit further down there, Steve will call on you too. Okay, so now back to, do we have Harry and Wende coming up on the screen? Hopefully. Okay. Jeff, we may want to, okay. Will, do you want to turn your video off? I don't know if we can do that or not. Okay, there we go. There we go. Okay, very good. So let's get going. And one more thing before our panelists introduce themselves, and then we have planned questions that we will be sharing with our two panelists. And then we will open it up for questions and answers at the end. So we encourage you, as you gain this important information this morning, as questions come to your mind, if you'll jot them down, and then later on we'll ask you to electronically raise your hand so we can call on you. We found that works well because many of your questions may be answered as we continue through the presentation today. But let's get going. Harry Gibbs, could you introduce us and tell us how you're related to this topic?
Yes, good morning, Virginia, and thank you for everybody joining this panel this morning. I am currently the vice chairman of the Williamson Central Appraisal District, WCAD as it's finally referred to. I've been on the board for about 16 years. The board that I serve on does not have anything to do with your actual valuations or protests. This is the big board. We hire and fire the chief appraiser. We deal with budgets and such things. So what Virginia asked me to do was talk in general, and I'm going to say I will give you more of a 30,000 foot view of what the property taxes and appraisals and that sort of thing. But we'll later on, Virginia will email you links to get more specific. Okay. So we'll start here.
Okay, I'm going to stop right there for just a minute. Okay, I want to have Wende introduce herself, and then we're going to go back and fill in all the 30,000 view. Okay, 30,000 feet view. Yeah. Wende Wood, who are you and why are you here?
Good morning. Yes, my name is Wende Wood, and I am with Austin Title Company. I have worked in the title business in Georgetown for 20 years, and I'm here to talk about what happens when you sell your home or no longer live in the home. And when you sell the home, how the taxes are prorated and how we collect your portion of the tax year taxes.
Okay, thanks for that. So I just want the attendees to kind of know what's coming ahead. When we do some topics, and we've done that topic before, but we always have new people joining us and new ways of explaining and new information. So now I am going to go back to Harry. And Harry, can you start us off on this 30,000-foot view of taxes in Texas?
Yes, I can. Thank you.
Okay.
So what we have sources and uses of taxpayer funds. And unlike the government in Washington, states, counties, cities, and independent school districts cannot print money. So they have to raise money to fund the business of the citizens from the states and other sources. These are property taxes, sales taxes, and income taxes. And we'll think of it as a three-legged stool that supports a platform. Well, Texas is one of the states that does not have an income tax. And many of you may have come from states that had income taxes, as well as property taxes and sales taxes. One of the things about property taxes is they may seem higher here, and they are, but they have to fund the schools and the cities and the counties. And that's a big portion of the funds that go to the schools. And we all want better roads, and we want better educated students and that sort of thing. So that's referred to as the three-legged stool. And so some of you come from other states.
Okay, go back just 1 minute. So the three-legged stool, identify the three legs again. Could you give us those topics? Oh no, did you freeze?
So we may have had a freeze up for a
Yeah.
second. Is that?
Yeah, now you're back on. Okay. Can
Okay,
you
so
clarify for us.
Again, apologize. We're on Zoom and sometimes these things happen. And people, you'll have a chance to ask questions if you miss something. And I'll also try and repeat a little bit to keep you well informed. So the sales tax is our second source of funds for operations of the city and the state. And those are very important. And so you would pay state sales tax. Let's talk. Now we've talked a little bit about where the taxes come from. We know a big portion of it's from property taxes, which is what we're going to talk about. So we go back, there's another three. Williamson Central Appraisal District assesses values. Elected officials of independent school districts, county, city, they set the tax rates, and then they determine how those funds will be spent. And the tax assessor sends out your tax notices and actually collects the taxes. And so those three. Now, one of the things that is very important right now, as Virginia mentioned, is you just got your appraisal notice and your values may have gone up. I think across the board in Williamson County, 19% increase. So very strong increases. We have a lot of people from moving in from out of state who are paying very large prices for properties right now. And the market is very hot. And you can see all of this stuff if you read articles. There's also, on the Williamson Central Appraisal, WCAD.org.
Another freeze up. Let's see. All right, there you go.
Where did I cut off? And I'll make sure
Okay. Yeah, you'd been to, okay. And I should have waved to you when we lost you there. But go ahead and just start.
We lost him when he was talking about people moving in from out of state.
Right. Well, you had said yeah, thank you, Howard. When you had made the comment that across the board, appraised values have gone up roughly 19%, and then the contributing factor, as you were explaining, was about this increase in people moving from out of state here. So I think that's where we were, Harry. Okay.
Right. And on WCAD.org, which you can check later, and again, Virginia will send you these links or these emails or the websites. You can go on, and there's a really neat place where it talks about various articles about what's happening. I think there were 3 articles from as late as April 6th that talk about Texas and the hot market that we're in, and Central Texas in particular. And it goes into a lot more detail than we'll go in today. And this is for some of you may be very interested in learning the details, and others may say, hey, I just want to make sure everything, I'm getting all the exemptions and the taxes are proper. So those are the things we'll be talking about today. The appraisal district, which I'm going to talk more about than other things, I'm going to give you our mission. We will provide quality service with the highest standards of professionalism, integrity, and respect. We will uphold these standards while providing an accurate, fair, and cost-effective appraisal role.
Oh, goodness.
You can't do anything to impress. Jeff.
Virginia?
Yeah.
I think we froze again.
Yeah, you did. And it's interesting because we're in the same building on opposite sides.
I don't know what's going on. Anyway, point being is,
Bear
in the
with
state
us,
of Texas,
Indies. Go ahead.
yeah, when you stop hearing me, just let me know where I stopped, and then we'll kind of recap and go through from there. But I was given the mission statement. The Central Appraisal District, each county has one. They have to comply with the state comptroller's rules and regulations. So this is not something that that they just make up. They have to do certain things in order to do all the parcels within the county. And the county is we have over 250,000 parcels in Williamson County that have to be assessed every year. So it's quite the job, and they do a very good job. Sometimes the values are out of sync, sometimes they're not, but that's why we have a procedure, which is the ARB, the Appraisal Review Board. And right now, if you have a contention with the property value that's on your appraisal notice, then you have an option you can protest that either in person or online. So those are some things, and there's different remedies. Now, the good thing about Sun City is there are quite a few sales. If many of you live in Sun City and others may live elsewhere, when you're in a subdivision or an area that has a lot of sales, you can show value pretty easily what it is. I mean, because if you have 40 sales in the neighborhood, that's pretty good indication of what the values are. And so that's very important. And that's what
Tell him when it's wrote.
I think he knows it, I think. I want to jump in. If people can hear me, I think you can.
So go ahead.
No, go ahead. I was
going to say that, and I lost a little bit. So the appraisal side is setting the value, and then once all the values, all the protests are through, and we have a total roll, and that's the set value, then every entity within Williamson County, whether it's the city of Bartlett or the city of Round Rock or Georgetown, Williamson County, all of the school districts, they use those appraised values to set their rates. And they're limited. Now, this is a good thing for many of you to know. The school taxes are limited to going up 2.5% over the last year's total amount collected. So there's limits there. And within the cities and counties, they get a little bit more. They can go up to 3.5%. And so those are some of the things that can go up. If they want to go up more, then they have to come to the voters and they have to say, we need more money and here's why. And I will say it's very important that everybody listening to this panel today hold your elected officials accountable. And I'm talking about school board, city council, county, and I'll even go at state and federal as well. I mean, we need to hold them more accountable because too often we don't speak up and they do what they want. So let's hold them accountable and make sure that they hear your voice on when taxes go up.
I want to pick up a little bit more. I know we may jumble these questions, but because I know a lot of people probably picked up on the word protest. We get our assessed value and it's high, but is it worth protesting? But before we get to that, people need to know what is really impacted. And that's something I want Harry to speak about when he can come back live with this. Are you live?
I'm back live, Virginia. I got protest. I missed a little bit.
Okay,
so
what I
sorry.
want to say is, when we see that value, could we jump into clarifying what does that really mean in terms of how much money I'm going to be paying for taxes? Now, you were explaining to us about how school rates are limited to so much in the city and so much.
Right.
I guess what this gets us into the question about what impact, how do I know what we won't know until October what we're actually paying when we get that notice. But in preparation for that, how do people know if it's worth or what they might gain by a protest?
Well, the protest, number one, the protest is, again, when you protest the value, if there's a discrepancy in value, then it's worthwhile protesting. However, having all your exemptions in place, and I know Wendy may mention these as well, but you have your over 65. If you're over 65, you've got your homestead exemption, which is a $25,000 exemption, and you may have disabled vet exemption. So you have exemptions that will actually lower the property value a little bit. And then you've also got the tax ceiling, or people may know it as a tax freeze if you're over 65. So your taxes will be frozen at a level, maybe not all of them, but most of them will be frozen. And so that gives you an indication, even if your property values are going up, you still may be frozen and under whatever those property values are going up to. So that's one of the good things, is make sure you have all your exemptions in place and you file for them.
Okay. All right, so we know, and most of us, while we're waiting right here, I would imagine you have your homestead exemptions on your properties. If you're new and haven't filed for that, you have through the month of April. You can go online to file for a homestead exemption. And if you qualify for others, you can add those too. Okay, I think you're back with us, Harry.
Okay, yes, I am back with you. And so it's important that your value, okay, once you know your value, the entities will come back and set the rates. And so whatever those rates are, when they finally have them done, and that's generally, the setting process is in the August, September timeframe, and they have hearings on these. And this is where you have a chance to make your voices heard, which I encourage highly. So that will happen. The appraisal roll will be certified in July, and that's after everything's protested out or the majority of the protests are done. And so they set the value, and then the tax collector, which Larry Gaddis, very good guy, very well qualified, is the one who will send out your tax bills. And then you will get those and you'll have time to pay them. And there are ways to extend, as has been mentioned as well. And those are things that I'm not going to be the expert in. I will point you, as will Virginia, in the direction of the expert. And again, this is more of an overview and to address questions, not maybe your specific, but in general, so that everybody can understand better the way the process works.
Okay, I think that helps us a lot. I think I'm going to change our script a little bit, Harry. I want to move ahead over to Wende and get some pick up on this, and then we're going to come back and clarify a little bit more. So Wende, you are in the title business. So when we're buying or selling properties, we like working with our title companies. Could you clarify, when someone is selling or buying a property in the state of Texas, how are the taxes handled at closing?
Sure, I can address that. Our taxes in Texas are paid in arrears.
That's an important point for people to remember. That
yes, they're paid.
We paid for last year's, and now we're finding out what this year's will be, and we pay for them end of the year, beginning of the next year. And then there are alternative ways to do it. But okay.
Yeah, the tax bills come out around October, November, and they are due before January 31st of the following year. You can pay them without penalty. If you don't pay them by January 31st, there will be penalties. But to go back to the question of how we prorate, we take into consideration what the value of the property is as it's been set by the appraisal district. We take into consideration any exemptions that are on the property. And as the seller, you would be charged your prorated amount of that tax year's taxes. So we're in 2021 now. If you were to sell your property now, the title company would collect the taxes from you from January 1 through the close date. And we give that credit to the buyer. That means that when the tax bill comes out at the end of the year, the buyer will be responsible for the full annual amount since the seller already gave them their portion. So we take into consideration the exemptions that are on the property. There's a homestead exemption, and wherever the homestead exemption is on January 1 of the tax year, that's where it will stay for the remaining of the year. You don't have the option to move that. But the over 65 exemption, you do have the option to move that to another property in Texas. So if we understand the over 65 exemption is to be moved to another property, the seller's taxes will be prorated with the homestead only, because you can't benefit from both properties. Some people think that the over 65 exemption would be on one property through the closing date and then move to the other, and they would pay the prorated amount on the over 65. But when we prorate taxes, we have to get as close as possible as what the actual tax bill will be when it comes out.
Okay. And so those are then related to that is, so you've talked to us about exemptions when we sell. We hear sometimes, okay, I'm selling my home here. I'm buying a new home in North Texas. I'm going to take my tax rate with me. What does that mean? Explain that to us.
Sure. So the tax rate is different in each county, depending on the entities that tax that property. It's my understanding from the appraisal district that you go to the county where you're moving from, and they give you a letter that tells you what your percentage is between what the tax bill would actually be and what you pay with your over 65 exemption. And so they give you the letter, you go to the county that you're moving to, you give them the letter, and you pay the same percentage in that county. So if your over 65 exemption gives you 40% off of what the taxes would be in the county where you live now, then when you move, your taxes would be 40% of what the taxes are in that county.
So it's not just telling the escrow agent we're doing this. To take taxes with us, we have to go get the letter from the tax assessor. Now that we're clear,
So
there's
the appraisal district.
the appraisal district, back
Mhm.
to Harry's world with WCAD there. Okay. All right. Let's see. So, and you mentioned it there too, that we're, lowering it. Harry had mentioned in his part about when we have a homestead exemption, that it's really lowering the value. So then we have not as high base as we continue to figure the taxes. So that's helpful for people to know. Okay, before we open this up for questions, Harry, because I know I kind of cut you off a while ago, hoping maybe the internet connection would stabilize a little bit. I know you had other points you wanted to make us aware of on that whole process. Are there some things you want to make sure you pick up on with us?
Yeah, let me throw one thing out, Virginia. In your appraisal notices, you're probably shocked. And generally, I think over 19%. So let's say your property was appraised at last year was $100. This year it's appraised, and it's your homestead, it's appraised at $120. I'm just using simple numbers. You can only go up 10%. So your taxes would be based on 110,000, not that full number. So that's something that's important.
Okay.
Yeah, it's going anyway.
Good. Yeah, so that helped us. That, in fact, a question was sent in, and this is an example of this. I'm going to mention his question. Hopefully Harry will be ready to answer it for us. A woman had sent me a question, Harry, that she said, I have a second house in Williamson County. Recent appraisal I received last week shows they've increased the appraised value. She says 49.9% over last year. I've had the house for 2 years. Are they allowed to make that large of an increase? Could you?
Yes, they are. And the other thing is just even if you're over 65, let's say you own the house next door to you and you live, everything's frozen, your homestead, all your exemptions are in place. You buy that house next door, it's at full freight, age doesn't matter, it's nothing, and they actually can go up to whatever the market is. And that's where you really want to get a good realtor like Virginia and protest, or if need be, if you think it's out of line, you need to be able to protest that.
And so let's go ahead and follow up with more about how that happens. They have live and online protests now. In our statement, our notice from the appraisal from WCAD, it gives us some, it kind of outlines. In fact, there is the form there if you would want to protest. What you will need to do is to have accurate information about what are comparable properties selling for. And this should be based, the date is January 1, 2021. And that's where we would want to pull together information in that time frame. Now, jumping ahead to next year, Harry, I'm really curious to see what will happen, because 19% this year, we had an influx, but our real price increase here has been coming on since February. So, there's going to be a lot more to come, I'm afraid. So they would attach to their protest market analysis to show what comparable properties are selling for. And I think that's what Harry was telling us back. Okay, so if we want to protest, we need to get accurate information about comparable properties, right?
That is correct. And there are other remedies. If you do not feel you're getting the right deal, there you could have legal action. Of course, that costs a lot of money, and that would be on a very big property. But that's generally, you get things worked out at the protest way, hopefully, if you have good comps and you have a reasonable thing. Also, let me throw out this year, because of the freeze, if you had massive damages, you can also get some exemptions based on the freeze. And you will when you go to wcad.org, there's more information that. In fact, when you hit that website, it'll be scrolling across the top. You will see that. So
now,
as well,
a banner calling attention to if you were impacted by COVID-19. By the freeze here in our little blizzard. There's resources to turn to for some.
That's right, and it's in different tiers. So you really, if you just had $100 pipe or something, don't worry about it. But if you had a $40,000 issue or some big issue, then that's a different story.
Okay. All right. I think I would like to go ahead and open it up for questions. So if not, we'll have some more points we can come back with.
Sure.
But if people who are our attendees have any questions, okay. And I will call on them. So Ann Froelich has a question for us. Let's see. Okay.
Yeah.
There, okay. Ann? Can you, always have to remember how to do this. Ann, will you click the button to unmute yourself? I think you just,
Okay,
there you are. Hi.
Hi, Virginia.
So your question, Ann?
Yes. I own my house, and that's all I own in terms of property here. Since I'm over 65 and I have the homestead exemption, my tax rate, I guess it is, anyway, it's frozen. I basically pay almost the same rate amount every year. Does protesting make any sense for me? Or would that make a difference? Say I go ahead and sell my house in a year or two. Should I protest now to protect something?
Oh, okay. I will give you, here, I had a friend, a very similar situation. He actually lived with his mother, who was very elderly, and she subsequently died. She actually died this year. And he always protested. I said, it's good to keep the value in check and make sure that the value is just not rising inordinately. And because when in this case, his mother passed away, the values went way up, but if he hadn't kept those values in check, it would have even gone up more. So that's not a bad plan, although I wouldn't put too much energy into it unless they're going up with a great amount, like 40 or 50% or doubling. Then I would say yes.
That's a great question, Ian, because I know that's one, it's a very common question of, so several factors involved there, one being whether to or not to protest. But what Harry has just called our attention to, we may say it doesn't impact us that much, but then when our property sells down the road, you know, that's going to have a greater impact. So, right.
Virginia?
Yeah, okay. And so Steve, I'm going to go ahead and jump in, Steve. Steve is with Silver Key Benefits. He's also one of our sponsors. You'll be hearing more hopefully next month. But he had wanted to call our attention to deferring for seniors. I love it when it comes out, you don't have to pay and you don't have to pay your property tax. Okay, but there might be a little catch. So enlighten us, Steve.
So I'm going to actually do just a tiny bit of history because there's a property tax code. It's 33.06 and it dates back to 1979. And if I'm describing it, what I'm saying is we had a group of feisty seniors that got together with AARP and they got some legislation passed. And Texas is the only state in the entire country that has this this exact legislation. And the core of it is, as soon as you are over 65 and you have a homestead exemption on a house, if you need, you can contact the chief appraiser of your district, which, Harry, who's our chief appraiser these days? I don't remember.
Alvin Langford.
Yeah. So you'd contact WCAD and you'd basically say, hey, I want to defer my taxes. And I love the fact that Wende brought up what happens with taxes when you're selling, because effectively what happens with this is you stop paying your property taxes, but they're just deferred. And every year you get a bill that says, hey, your property taxes are deferred. And there's simple interest that's added to that total bill. And so the really core important thing is you cannot get taxed out of your home. You can live in your house for the rest of your life, not have to pay the property taxes on it, and it is not a big deal. When you end up passing away, just like when you sell a house, like what Wende was talking about, all of those deferred taxes will become due. I believe it's a 1-year period that you have your heirs or whoever the estate has to, get those paid, get the house sold, etc. But that's the reason that legislation got passed. And it's really important to know.
Let me then clarify one point, because you're right, they can defer them, and you did mention there would be some interest. And so what I have found from my research is that it is an 8% interest charge. So that frees up money for you now. It's going to increase money at the time of the settling of your estate or whatever. So I just wanted to make sure people think, oh, I'm not going to pay any income tax, any property tax. Great. You're not, but somebody is, and they're going to pay more than what you would have been paying. So
right.
I just wanted to clarify
May
that.
I interject something, please?
Mhm.
If you defer your taxes and you own your home free and clear, then it's not a big deal. If you have a mortgage on your property and you defer your taxes and your lender finds out, which they will, then they will add that to your loan balance to bring your taxes current. So deferring your taxes may be a good idea if you own the home free and clear, but not such a great idea if you have a mortgage on the property.
Yep. And I'll address that because there are ways to get around that. Part of the reason I learned about this whole thing is there's a group down in Houston that I met with. It's the Texas Property Tax Back Program. And basically their thing was, okay, well, if you could defer these taxes, what could you do with the money instead? And their program involves moving the money over to a life insurance policy. At the end of the day, I'll say the math works out. It's good if you plan on living in the house in the rest of the year. And if you want to talk about, what that would look like, by all means do so. It's actually a really solid plan in a rising market environment like we've got right now, because when
If
we're
you own
seeing,
your home outright, just so you don't have a mortgage on it.
even
But he
if you
said he had
don't,
some ways around it.
Okay, okay, excuse me.
even if you don't, it may be worth looking at. And I'm not going to call any particular lenders out, Wells Fargo, but pretty much any lender besides them are probably you can potentially work with. But yeah, so the key thing though is that there are some interesting things that can be done with that money rather than just pay the appraisal district. And I'm a Rotarian. I'm a believer in service above self, and I, do no harm and that sort of thing. And so one of my very first questions was, is this going to hurt the appraisal district? Is this going to hurt everybody else? And at the end of the answer, or at the end of the day, the math actually works out in their favor. Because of that simple interest, especially in today's environment, there is nowhere that the appraisal district can go and get that kind of interest rate. And what ends up happening is if you choose to defer, everybody else in the entire district is going to pay just a tiny bit more in taxes.
Yes.
And I'm talking like a nickel to maybe a dime per person per year total. So it's not a big deal if you choose to do it, if it makes sense, because it's not hurting. I mean, all of us can afford an extra nickel or dime. Period, all of us can. So
Steve?
Yep, go ahead.
Yeah.
What-
good. Yeah, go ahead, Harry. Are you unfrozen? I hope.
Nope.
Well, he'll be back in a moment.
Okay.
And then when that district gets that lump sum of the go
The
ahead, Harry, back.
entities. I'm back. It was the entities, not the appraisal district. So, because they just set the value.
And I'm sorry, I did misspeak.
Yeah, that's okay.
So, but since what he said is basically, I'm just going to say at the end of the day, it does not hurt the entities or anyone else, as long as the percentage of people that are doing this is probably less than about 20% of the total population, which that's just not going to happen. So that's kind of my piece. If you're interested in talking about it, by all means, reach out to either Howard or myself. Virginia's got our contact information. But yeah, I mean, this stuff is, I was actually really pleased to hear some of the things, because I actually learned a couple things on this. So thank you for getting everybody together.
Okay. And actually, when Howard, well, I was with Howard recently, and he brought this to my attention. Howard and Steve are partners in their business. And when I had gone online and done found some interesting information about that. So again, you always want to be aware of it. I think Will had to jump off the call for another commitment, but that's where a financial planner, that could be part of the picture if it seems to be appropriate. But we often hear these overgeneralizations, and it continues and snowballs, and then people don't have the accurate information. So that's want to make you aware of it, but you would also need to do research. You had something else to say, Steve.
Yeah, mentioning Will, that actually, I'm really glad you mentioned that. In a normal environment, keeping on with whatever plan you've got makes good sense. We are in a very unusual environment. Nowhere else in the country are we seeing rate increases in terms of home values, et cetera, going up quite like they are here, at least not to the best of my knowledge. And it's been a fairly normal thing. Williamson County has been one of the top 10 fastest growing counties for what, 20 years now, Harry, at least?
It's been a long time. Yes, you're right, Steve.
But when one of the questions came up about, hey, I own a second house, that sort of thing, I would say that anyone who owns real estate other than their home should be potentially considering talking to a financial advisor type person, because I'm not, anytime environments change a whole bunch, it's worth talking to an expert and just saying, hey, what are the implications of this? What is this going to look like now, 2 years, 5 years down the road? Because from a rental house standpoint, I think it's probably fine. You can build those extra taxes into the rental, income, and it's not a huge big deal, and your equity is growing. But I wanted to make the point that because the environment is changing so quickly right now, I would advise any of you that have advisors to talk to them and mention, hey, by the way, I've got this property. Do I need to be thinking about it? And if you don't have an advisor, you might consider just having a consultation with someone who is knowledgeable about both finance and real estate. And by the way, that person is not me.
Okay,
It's me.
there you go. We will be glad to share contact information if you need this information. So Harry, now we know, and I'm glad you clarified, I think we're all learning this, yes, it's not impacting the appraisal district, it impacts the entities. And I just want to ask you, Harry, to say something about the entities, because we kind of jumped around. People just want to say, how come there's such a variation, in the tax? It may not be that much, but yet you look at entities, because would you explain what that means from city to school? We may be in community college district. Tell us what the entities, explain that a little bit more.
Okay, a little bit about the entities. The big three, and the biggest one's generally the school district. When you look at your tax bill, not your appraisal notice, but your actual tax bill, it'll have a breakdown, and it may show up on the appraisal card on the website you can look at, but generally your independent school district or your ISD is the largest, and then the city or county will be second and third. And then unless you're in a MUD, a municipal utility district, and those can be sometimes quite high, and they were used to build infrastructure, roads, or sewer, water and sewer to build that community. And there are many MUDs in Williamson County, so be careful. So right now, I would say rates probably, if you think on a percentage wise, 2.2% on the lower end to maybe 3% or more on the higher end if you're in a MUD. That's kind of the percentage against your value.
So okay. So with that, again, that percentage you mentioned from 2.2 roughly to maybe 3, is that what you think may be the increase, or what were you? That's what.
No, that would be the total. If you combine your school, your county, your city, and the various other taxes, that will be somewhere in that general range. Specifically, you need to check, and we will have some websites that you can do that on, that we will.
Okay, so other new information there.
Other questions?
Yeah.
Besides that,
I'm looking. Okay, if you have, let's open this back up to the audience, and this may have generated some more questions, and then we'll come back just a minute, Harry. Any other? Okay, if you want to continue what you were saying, Harry, and then I've got some raised hands. Let me pick these up.
Yeah, sure.
And then we'll. Okay, let's see. Gwen, you have a question. Can you unmute yourself, Gwen? I think you did. Okay, Gwen? Do you see your little microphone to unmute yourself?
Oh, I think you can hear me now?
Yes,
We
yes.
can hear you.
Okay.
Nice and clear.
Yeah, I'm trying to go back. Okay, so my question was in reference to that point about what your tax is in the original property, and you sell it and you're moving to a new location, getting a letter from the taxing appraisal, is it?
That's
Yes, you'll
correct.
get it from the
That was
appraisal
Wende.
district.
I think that was Wende, yeah. So what if you're moving to a location where the taxes are less?
So that might be something that you want to consider when you're deciding if you want to move your over 65 exemption to a new property, or if you want to leave it where it is. If you leave it where it is and say that the value is higher on the property that you're selling and the tax rate is higher, it may benefit you to leave it on the property for the tax year that you're selling, because you'll benefit in the tax proration on the property that you're selling. But that's a decision that you have to look at and see what the difference would be. Does that make sense? Did that
Yes.
answer your question?
Yes, yes,
Okay.
simple enough, yeah. Okay, I just wanted to verify it because it was like, oh, what if it's less? You know, what do you need to do? So nothing.
Yeah, you get to choose if you want to move it or you want it to stay.
Okay, didn't know you could do that. All right, thank you.
Thank
Yay.
you.
Thanks for asking, Gwen.
Mhm.
Joe Wash, you have a question. I don't know who we're getting feedback.
Can you hear me?
Yes.
Okay. It seems like, well, I've been here over 15 years in Sun City, and I've never seen an increase of 10% before in all these years. And it's like they wholesaled the whole neighborhood and a bunch of others, just a whole 10% in value. It's always been 1 or 2% or something each year. Why such a big jump? Doesn't make sense.
Okay, here, let you respond to that. And I think you had addressed it briefly, but I'll explain more. The changes in the sale of properties. Harry, you go ahead.
Yeah, well, and I agree with you about the situation. And what we have a lot of people coming into the market who are paying outrageous prices to the people who've been here like yourself for 15 years, and you've only seen it go up a little bit. But Williamson County's always been hot, but we literally have people, if you drive down I-35 and look at the license plates, you see more out-of-state license plates than ever. People are coming here because Texas is a great state. And unfortunately, that impacts the people who've lived here for a long time because they're paying higher prices. And we're seeing it all over in terms of asking prices. Prices are much higher than.
Yeah, I will pick up on that statement that Harry was making. As a realtor, when we look at comparables and we do see prices going up, and because of our limited inventory right now and people wanting homes, and that's a trend almost everywhere, it's not uncommon to see buyers making offers above list price so they can get the home hopefully and that's going to contribute to this. So there are lots of factors. Again, the value is one part, but then what it really comes down to where the rubber meets the road, what we pay is a little bit different. Joe, so I mean, if you want to give
the protest form, I noticed, has a checkbox on it that is for veterans. I'm not a retired veteran. I'm just a veteran. I'm not a disabled veteran, but is there a separate thing for just veterans also for deduction?
No. You'll have to confirm that. I don't believe that there's a separate deduction for veterans. I think it's basically for disabled veterans, I believe.
Yeah, I think what you're referring to then is on the back where it lists the possible exemptions because it is disabled veterans or a surviving spouse. And so you're just wanting to clarify, might check with the Veterans Board or whatever. But
Hey, this is Steve. I'm going to just throw in the disabled veteran, I believe, starts becoming relevant to property taxes at a 40% disability rating. So anybody that has a disability rating with the VA, as soon as that disability rating, I believe it's 40%, they need to start looking at or having a conversation about that particular exemption.
okay. All right. So I hope that helped there. Kathy Sleeper,
Yeah, because
you have
the form just shows disabled, but then there's another checkbox there that says military veteran. Doesn't say anything about disabled.
I've not seen that.
That's in step 5 where the signature required goes.
let's see, I have mine here. Well, here's my project one.
Step 5 signature required for submission.
Oh, I see. Oh, signature required. Yes. Person age 65 or older. Well, military service member, or is that involving refer to active service? I guess
Next line says military veteran.
it does say that. I guess mark it, see what happens.
And you can
Well, it
always
sounds like we
call
need to
the
find out and
appraisal.
we can just talk about it next month.
Well, we can also put an email, but military veteran.
So
Harry, did you have?
let me
some-
say this, I think that's a very specific question, and when we get into that, we're not gonna have the answers at our disposal, and I recommend that you contact the appraisal district or whatever document you're looking at, and I guarantee you they will clarify. Also, online, they have a chat box that you can chat with.
Yeah, and those are one of those resources we'll be sending out. I thought there was an email, maybe it's a chat box now, where you can put in your specific question and have a knowledgeable person respond. So the answer to your question, Joe, is we gave you a resource that hopefully will help with that. I want to move to Kathy. Let's see. Okay. Kathy, you want to unmute yourself?
Okay, can you hear me,
Yeah.
Virginia?
Yes, thanks, Kathy.
We live in Sun City, and I was looking at the increase in our property valuation compared to others in our neighborhood with the same model. And I've seen as much as a 2% difference in increase from like the lowest to the highest. Some went up like 13, 14%, and others went up 16%. I would expect for the same model, they'd all go up in valuation by the same percent. Is that
Let me
correct?
ask- Let me ask you one question, Kathy. You probably already considered this, but other attendees may be asking that question. Yeah, so you know they're the same floor plan as you up there on Mustang Island, the ones that you're referring to. Are they all on the Greenbelt Golf Course or some on the other side of the street?
I looked at it both ways. Like
Okay.
the ones that are on the golf course, there's a 2% difference. And the ones not on the golf course, there's at least a 1% difference.
Okay, we're going to go
And then
back.
I compared it by street also, Virginia. So they do vary quite a bit.
All right, Miss Kathy's going to win the prize for doing pre-homework and trying to figure it all out. Before I go back to Harry for that, the importance of having information is what Kathy is showing us here. And Harry, will you address how they come up with their perceived value? Because in Texas, we are a non-disclosure state. We don't send out postcards telling you what somebody else's house sold for. Now, when you close on your sale of your home and you have your settlement statement, your closing statement, if your tax, and it's the year of that sale, if your tax value comes in higher than what you paid, that's a great time. Didn't you want to take your closing statement down there and use that as concrete evidence that this is what I paid for it? It's not that high. Of course, if it's lower, that's a whole nother story. But Harry, would you see if you can, so to know why there's the variation, we need to know how the appraisal district gets their information to come to these.
Well, they research the market. They have people, for instance, people bring in their closing statements if they want to sometimes. Also, people will volunteer that information. Sometimes they'll pick it up from realtors. So they really get it from many different sources. And they have, I guarantee you, the appraisal district has a lot more information than the appraiser that's appraising your house. I'll put it like that. They've got a ton of information. And the values are generally pretty close. We've seen in the past where they're actually lower than market. And with the market moving so rapidly now over the past year, and you got to remember, those are appraised values as of the 1st of January of a year. So in that year period, things can go up dramatically over the past year. And they do.
And this year they're well on the road to be doing that. I know as a realtor, when I'm looking at pricing a home, I look at comps and then I look at tax just to kind of see, is it kind of a triangulation, and it's interesting. You often right on, sometimes you go, my goodness, seems that's awfully low or high, but it's over a large quantity there. So not a concrete answer to your question, Kathy, but it's what do people, how do they do it the best they can? And Harry is right. When I've heard more of a detailed explanation of the process, there's a lot of information that goes into that.
So I've got a follow-up question then. Is it worth protesting if you're one of the ones that has like at the upper end, is it worth contesting it? Because we're talking the same model house on this with the same view.
What's the value?
I mean, the market value?
Yeah, or what
550.
are they saying the markets? I'm just looking at the percentage. And are you frozen right now?
Yeah,
Okay, probably not. I mean, you might be able to protest, you might be, from an educational experience, it may be worth your while. I don't know if you're going to get a value reduction is what I'm saying.
I laughed because there was a gentleman a few years ago and he just said, I make a point to go protest my taxes. It's just what I do. And, you know, so but if Kathy, you know, if you need some more information, we could put you in for advice from Harry, or if we can help you with that. I think what Harry is stressing is there is that kind of line. Is it worth it? Is it not worth it?
yeah.
So it's not the value, it's how is that translated into what you really pay, you know? Yeah. So best answer
I
we
would-
can give.
I just expect all of them to go up 10%, 15%, not the, you know, from 14 to 16%. That's what really surprised me.
So good point. Maybe you should call it. Go ahead, Harry.
Yeah, Virginia, one other thing is I am working, I would like you to save all the questions. And if anybody has questions that they can send to Virginia, what we're going to do, all of this made me think, I want to take the questions from the people, the taxpayers, and find out the ones that you're most curious about. And I want to take those to the appraiser, to the county, to people who in the know, and say, these are some of the things that people are concerned about. And then I also want to have them do a presentation for realtors, so realtors will understand these as well. So those are some things we're doing proactively to be able to help you better understand the process. And we may not always have the best answer that you want to hear. My house is going to be lowered or the taxes are going to be cut in half, but we do our best. And you got to remember, the appraisal district is required by law to do market value.
So I think that was great, Harry. Thank you for doing that. And we will follow up too. Harry, when you know, as we have more information, we might even do a bonus call or a blog post that would address some of these issues. So great. Thank you. We're having our voice heard.
Virginia, one last thing. I've got to leave in about 5 minutes. So if you have anything else for me, please ask right now. And if not, I'll do it in the future.
Okay, let me just do a real quick check here. Linda Morrison, Ann Chalmers, and Don Garby have questions. Right now, I'm going to just check. So, no. Ann, was your question something that Harry needs to respond? Oh, would you unmute yourself?
I did.
There you are. Okay, is yours a question for Harry, or is it a general one we can answer?
I'm not sure. I just want to know what happens. You've got a homestead exemption for being over 65, and the person that was 65 at the time they said it dies. What happens to the spouse?
Good question. Is that a
Do
Harry
they
question? or
keep
a
that
Rand?
rate? Do they recalculate for that person? How does it go?
So the person, the spouse is under 65?
No, over.
I'm sorry.
But
But I
Maybe-
suppose you could answer it for both, but in my
Yeah.
case, over.
Yeah, no, that would remain in place. The details of it, I don't know. We'd have to check into that a little bit more. But I believe, in fact, I know a situation where a gentleman was living with his mother, taking care of his mother, and she died in January, and all the tax, everything's the same for the rest of this year, even though he's over 65 too, but it was her house. And so anyway, there's a lot of different variations.
So
So does
when,
it recalculate next year for him?
I don't know the answer to that off the top of my head. And may I say one thing, Virginia, because when I do, before I go, I want to say to everybody, no one person on this call knows all the answers. And one of the great things about Virginia, she's put together a team of professionals to help answer questions and help get better information to you so you can make better decisions.
thanks, appreciate
Will
that.
you be sending out the answers to some questions, Virginia?
Yeah, when I get them from Harry, when he gets them.
Yeah, we'll get the questions and we'll do our best to answer or put you in touch with the right person.
And we can do that. Harry happens to be with Keller Williams also. He has a commercial realtor. So I do see him. And so we will make sure that we get some more information out to you. And this is a good point for me to mention before I call on other questions here. All our recordings are made of the webinars. And they will go live on our blog post on the seniorslivingsmarter.com website. They will be up next week. And we don't do any glossy editing or anything, but we have to do some at the beginning or at the end. But Jeff Cramp, who works with us as our tech person, he's going to become the producer of our seminar webinars. He's the one who works on that for us. And a big thank you to Jeff. He's behind the scenes trying to keep everything going. And while I'm thanking people, I have a new administrative assistant, Brielle Gard, and she's been replying to questions and inquiries. And thanks to Brielle, we got everybody in today. No wrong invitations were sent out. So thanks, Brielle, for coming on board to help us. Okay, I want to move on to Don Garby. Don, you want to unmute yourself?
Thank you.
Hi,
You're-
Don. Yes. Well, no, he's right here. Don, speak. Oh, no.
Presentation. Several years ago, I went to but I hadn't checked the right box on the back side of the protest form. So they weren't going to listen to anything I had to say about my protest and cleaned up. So the gotcha is gone.
Oh, Don, I'm sorry. We seem, at least I'm not hearing you.
I'm not hearing him.
I'm not either.
Okay, I tell you what, I may come back to you,
Yeah.
Don, in just a minute. Oh,
Virginia, I'm gonna go ahead and leave, and I just wanted to say thank you very much to everybody, and I'll follow up with that information that I promised.
well, you volunteered for a big project here, Harry, but thank you, and it will be worthwhile. We'll get more information, and like I say, a way to going through our system for our voices to be heard with what are our concerns. So
Yeah, and thanks, Wendy, Jeff, and Brielle. Thank you all. Have a
Thank
great
you.
weekend.
The back
And
is.
everybody, appreciate it.
okay. So we will be sure Brielle will help us identify the questions to give to Harry. Linda Morrison, can you unmute yourself? Hi, Linda, are you there? There.
Can you hear me now?
Yes, we do.
Oh, good. I tried to get on before Harry left. My
I'm
question is, I'm in Sun City. I'll be 65 June of next year, 22. I want to build a pool, or anybody else who has something like in my situation, do I, if they want to add on to their home and the property value will go up, do I wait till I'm 65 in order for that? Do I build before or after I'm frozen with my taxes?
That's a great question. I think, and I'm not certain, but I think that once your taxes are frozen, the value can go up, but the taxes don't.
Mhm.
And that would be a good question for the appraisal district to get from the horse's mouth. But also I wanted to point out that you said you would turn 65 in June of 2022. You can apply for that exemption in January, the year that you're going to turn 65. You can apply for the exemption before your birthday.
Oh, I thought it was the other way around. I couldn't get the benefits until the following year, so I can apply.
I believe that's true. But again, I'm not the authority. The appraisal district is. And I know that they've given everybody the website for the appraisal district. You can go on there and get a lot of information, but remember, you can also chat with them or you can call them. They're very helpful on the phone.
And I want to say one other thing, Linda. Again, this is a different direction. Yes, we want to get the best financial, assets we can, whatever. What also, I always think how how do we value the enjoyment that this expansion, pool, patio, whatever we want to add on? You know, is it important enough to us in our lifestyle that it might be worth it to go ahead and not have that tax benefit? So anyway, just throw that out because I see some people say, oh, I should have done whatever it was sooner. So anyway, but that's a good question. Brielle remind us to follow up specifically, but I think Wendy has answered that for us. Okay, Don Garby, I'm going to come back to you. Let's see if you still have your question, Don?
No, I don't. It was, Harry left, so he was the one that could answer the question.
Okay, well, email that to us and we'll put it with our group of questions for him to take to the appraisal district. Okay?
Very good, thank
Okay, thanks, Don.
you.
All right. Any other questions? I don't believe I see any right now. Okay. So if you have a question, you can raise your hand again. I think what I would like to do is, I'm sorry I didn't even thank Harry when he left, but I do want to thank Harry and Wendy for taking time to be here and for you to see what great services we have out there that can help us out with information. So we appreciate their being here. I want to introduce you to, some of you have heard about this. Often our focus is on downsizing, and that involves a lot of things. We've had a lot of seminars on that related to it, everything from, you know, knowing more about what the options might be if I want to sell my home and move to generally an apartment, an independent or assisted living, whatever my situation might be. How do I go about finding a community? How do I get rid of the stuff? How do I get organized for my move? And a lot of people say, I just need more support. So what we're going to be doing starting the 1st of May, we're going to have a seniors downsizing smarter club. And this is going to be a small group of people. I mean, and it's for people who are really thinking, okay, I may be downsizing right now, or it may be next year or a couple years, but I'm actively engaged in that process, usually trying to get rid of stuff or planning for it. And so we're going to have an introductory seminar the first Thursday in May. It will be a Zoom meeting, so we will be more interactive and it'll be a small group. And then as soon as we can, we'll start meeting live. But what my goal there is just to provide additional support and resources. We'll have extra kinds of materials for people, and there, people will make a commitment to be in that kind of group. But we will, Brielle, we've sent out some, and a couple of you, I need to follow up with you. You have inquired about that. We have an application that we will have ready at our May meeting. And, but I'm excited about launching our Seniors Downsizing Smarter Club. We have a great flyer about it, lighting your way to a brighter future with a greater peace of mind. And that's the whole goal. How can we simplify this and take away the stress? Okay, Jeff, are you wanting to say something?
Yes. At the end of the webinar, there's going to be a survey that pops up. And the last question asks if you're interested in the Downsizing Club. And if you indicate that you are, you'll receive information next week.
Okay.
That's all.
Thank you very much. Thanks for your help today.
You're welcome.
A lifesaver in this little webinar. Seminars are so much easier. You don't have to worry about technology. You can read the faces of people in the audience. And speaking of seminars, yes, we will go live as soon as we can. As many of you know, First Presbyterian has been our home base now. We were there for over 4 years, and 4 years when we COVID made the change a year ago now. And so we were fortunate to at least be able to continue the seminars as webinars on Zoom, which we're glad to do that. But most of us really miss the personal interaction of the seminars. Now, one advantage to Zoom, and many of you will identify with this, are people who cannot attend our live webinar seminars because of mobility issues, caregiving issues, or a variety of other reasons. So once we go live, we will have our meetings in person, but we will also be recording them, and they will be on our blog. Still trying to decide if we'll live stream them at the time, but at least you'll have that information. And so as I was mentioning, First Presbyterian, in addition to having to, working through restrictions or concerns with COVID, and they had extensive water damage during our freeze in February and had to do some work there. So once we're able to get clearance from them that we can continue, we'll be in touch and we'll move back to that. But we, in the meantime, I'm glad we could continue with the, at least staying in touch via Zoom. And then the other thing to call to your attention is that our next webinar will be May 6th, Thursday, our first, excuse me, that was the seminar, the Downsizing Club, May 20th, the third Thursday, which is our usual meeting time. And that will be understanding the cost of senior living. Just some little teasers about that. Again, it's to help with that financial planning. Well, how much might I need for this? So whether it be the cost of senior communities, independent living, assisted, memory care, skilled nursing, should we need that, helping people get a handle on that. And then, what are some ways to do that? If you want to age in place in your own home and you are looking at, I'm going to need more assistance to remain in my home, we will be able to, we'll have panelists who will provide that information. So it'll be a lot of good planning for you. And I look forward to seeing you on May 20th. And for those who are seriously wanting more support with downsizing, we'll have our meeting May 6th. And unless there's something else from anybody else, do remember to email questions. Probably the best place would be, Brielle, I'm volunteering you. If they email them to admin@seniorsliving.smarter.com, Brielle will compile our list. We'll go back through if there are any that we need to take out from this recording to add to that list and get those to Harry and see what we can learn from his exploring our questions. Anything else from anybody? If so, raise your hand. Wow, so hopefully you've learned a lot. Of course, what happens as we gain more information causes more questions, and we have to rethink sometimes what we've known. But hopefully we've given you a lot of food for thought on this whole idea about taxes. If you do need more specific information about what homes, kind of what would be comparable sales, let me know, and we'll see if we can help you. All right, well, with that.
Thank you.
Thank you, Wendy. Thanks so much for being here. I appreciate Austin Title's support of this.